Welcome to Stately Investing. And for all you returning viewers out there, welcome back. I appreciate the love and support. So, in today's episode, we are going to talk about how to make investing habitual. So, I'm going to give you 3 tips on how to start that habit of investing so that you don't even have to think about it. For all you new investors out there, how to get into those habits, how to build up those great practices so that you can start earning as quickly as possible. So first, if you want to join a channel that is going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is the place for you. So hit that subscribe button below and let's get started. All right, so let's jump into the tips of how to make investing habitual. So we're going to use some practical examples from my account so you guys can see what each tip actually means. And these 3 icons are actually a hint at what we are trying to do and build up those good practices so that everybody, whether you're a new investor or a seasoned investor, how to make things habitual means that in down times or in hard times, you still keep those things going. You still practice all of these habits because they're just in the back of your brain and you do them so often that you don't even have to think about it. So the first tip is do not touch your deposit money. So what do I mean by this? Essentially what I mean is try to make sure that your money that you use for investing is going directly into your investment accounts, right? So you have a budget of some sort. You have, this is how much money you make, and this is how much money you spend, and then this is how much money you save and or invest, right? And so what you need to do with that last chunk after you've worked through your budget, and really the first step is to work through that budget to understand exactly how much you can invest and how frequently you want to invest. But once you realize what that number is, do not touch that money. Don't let it just sit in your account. So if you get paid by direct deposit, then you can make sure that that money on the day that it comes into your account leaves that account and goes into your investment account. So why don't we take an example? Why don't we look at how I do this in one of my portfolios? All right, so we're in my M1 account here, and you can see we're on the activities tab. And so in the activities tab, you can see various things like deposits, which is what we are going to look at, but also dividends, your trades, your buys, etc. So first, let's go to the activity type and look at deposits and withdrawals only. So what you can see here are these periodic investments of $250. And essentially what happens is that money comes directly from my account. So we'll get into the next tip. This gives a preview of the next tip. But essentially what happens is that this money never really sits in my account for very long. And it is coming out in periodic time periods. So the 250 is just a regular sequence of events that I don't even think about, right? That money is set aside every week for my accounts. And you can see back here, I was doing 500 every 2 weeks, and then I moved to a $250 schedule every week. So same amount, right? That's what I know I have set aside for this account. I have $1,000 a month basically, and however I want to divide that up, whether it's 500 or 250. And 250 is actually the reason why I moved to a more frequent schedule is for dollar cost averaging. So I did a whole video on dollar cost averaging. I won't jump into that. I'll put a link below and also put a call out above. But essentially what you want to make sure is that your money that you set aside is directly flowing into your investment account, and your investment account is doing those purchases, or even if it's just sitting in that investment account, it's one more barrier to you spending that money. So you won't spend that money if it's not sitting in your regular checking or savings account. So why don't we jump into the second tip? So the second tip is to set up a schedule, right? So we've already got a preview of this one we see in my M1 account, but setting up a schedule is really the most important key to being successful in this habit, right? In order to make a habit, you have to do things repeatedly. And what you want to do is set up some kind of schedule. So like I said before, whether that's every time you get paid, or once a month, or once every 3 months, whatever you decide is the right schedule for you, stick to it and make sure that it's automated so that you don't even have to think about it. And that's what I love about M1, because it can just do those purchases for me on a schedule. You can set it up exactly how you want it and you don't even have to think about it, right? So between these 2 steps, you can see that a lot of my trading is just done automatically. So I am purchasing things because the money is flowing into that account, right? Tip number 1, I'm not touching that money. It just goes directly into that account, that portfolio for me. And then the second step is to make sure that those buys are happening on a regular schedule. So why don't we jump back to the account so you guys can see exactly how this is done. All right, so we're back into the activities tab here on my M1 portfolio. And instead of deposits and withdrawals, we'll look at trading. And guess what? You can see that there are some buys here. And so anytime you see those $250-ish amounts, or the previously the $500 amounts, those are my regular trades, right? And so again, this is happening every week, September 14th, September 8th, August 31st, right? This is happening every so often. Now, there are other trades in here, obviously, that you guys are seeing, usually for larger amounts, sometimes for smaller amounts, or if I have enough dividends that it's just going to buy some more, right? This is dividend reinvestment. And so this is what happens when I have accumulated enough dividends. I believe M1, the threshold is $20. But essentially, we are looking at these periodic scheduled investments and trades. So let's jump into one of them. You can see that essentially what happens is that $250 hits the account. I had some additional dividend money, so it purchased that as well. And you can see that it just automatically purchases what I want. And how it determines this is based off of my portfolio allocations. So I have target percentages for each one of these stocks in my portfolio, and then M1 does its best to balance to try to get to those portfolios based off of price fluctuations, right? So if, let's say, for example, I had 10 stocks at 10% each and something dipped below 10% because that stock dropped, that price dropped, then it might be 9% of my portfolio. M1 automatically tries to get that amount up, so it'll buy more of that stock and less of others, right? And so this is what I mean by automated. There are a lot of platforms out there that will do this for you. I personally use M1 because it makes the automation so much easier. Again, we're trying to build the habit so I don't even have to think about it. Once you have your strategy to begin with up front, you shouldn't have to think about, super complicated details. If you know this is a good company and you're willing to invest in it, you know how much you want to invest in it by setting some kind of allocation, then really you can automate the process by sending money directly in, tip number one. And tip number two, having it on an automated schedule. So let's jump back and look at what the third and final tip is. All right, so the third tip is buy something small as frequently as you can. So this is a little more of an active approach, right? But it also gets you into the habit because it makes it seem like a lot of people, especially new investors, have this issue that they think they have to have a large amount of money in order to invest. And I think with all these platforms out here now and being able to buy partial shares, that's just not true. You can do tiny buys periodically and as frequently as you have extra money, right? So we're going to look at one of my accounts in particular. We're going to look at my Robinhood account because I tend to buy more things in there ad hoc, and my M1 account really is for steps 1 and 2. And then for step 3, I typically use a different account, but let's look at that example. All right, so we're here in my Robinhood account and we are looking at my history. We're on the history tab here, and you can see that I am purchasing things periodically, fairly frequently. Now, some of these are bigger, right? So I just bought some store capital because they were at a price that I thought was good. And remember, I love to buy things on sale. So I'm going to put a link up top and down below on my video for buying things on sale. You can check that out. But also you can see that I have some smaller purchases here, right? So I have one share of Realty Income at $64. I have AT&T at $60. Public Storage, you can see I have a purchase here of $48.76. That only gets me 0.23 shares, right? Their price was $212.77 at the time. So that's what I'm saying. These platforms allow you to buy small things. So say, for example, you like Amazon or Google, with Amazon's stock price being in the 3,000s now, right? You can still buy $15 of Amazon stock, right? There's nothing really preventing you from making those small, frequent purchases. And I really think you should make investing a everyday occasion rather than some grand special occasion, and get out of the habit of thinking that you need to have a large amount of money to get ahead in the stock market. The way to get that large amount is to buy things when you have the money to do so, whether it's $10 or $10,000, right? Whatever is a small amount to you, make sure that you can do that frequently, and you will get ahead in the long run. You will make investing habitual rather than these special occasion moments. So why don't we jump back to the presentation to see all 3 tips and summarize how to make investing habitual for you. All right, to recap. So number 1, do not touch your deposit money. Remember, let that money go Once you figured out your budget, let it automatically go into one of your investing accounts. You'll never see it, you'll never touch it, you'll never be able to spend it on something that is not investment dollars. The second tip is set up a schedule. So remember, this is frequency. You want to be able to automatically have purchases and automatically have buys that align with your strategy so that you don't even have to think about it anymore, because you know that what you set up is the right schedule for you and is purchasing the right set of stocks for you. And third tip, buy something small as frequently as you can, right? So anytime you have a little bit of extra cash, again, rather than spending on something frivolous or something that you don't really need, you can buy some small purchase of stock. It doesn't even need to be a full share. So between these three tips, you'll start to make investing habitual. You'll get into the habit of knowing that any extra money you have is going to your future, and it will eventually set you up for financial freedom. So these are my tips. I hope you guys got something out of it. If you have any other tips, feel free to leave them in the comment section down below. Feel free to hit that like button if you want, hit that subscribe button if you want. Check me out on Twitter. That's Invest Stately on Twitter. And I hope you guys all have a good week out there.